Welcome to the Accounting Success Podcast. Ian Wellham is a chartered accountant helping other CPA firms maximize their profit potential and become the most relevant advisor to clients. To learn how you can add value, introduce new revenue streams, and move into high-value advisory services, simply go to www.haydenrock.com. On the podcast, Ian brings together successful accountants and industry thought leaders to share with you how they serve business owners and how you can too. And now, here's your host, Ian Wellham.
Hello and welcome to the Accounting Success Podcast. Today, I want to talk about an effective way to grow your firm, and that is by finding a speciality or niche that makes you different than the other 650,000 licensed CPAs out there. And with me on the call today is Michael Rozbruch, one of the most successful niche CPA practitioners in the country. In addition to being a CPA, Michael is a certified tax resolution specialist. He is a nationally recognized entrepreneur and the founder of the Tax and Business Solutions Academy, as well as Ross Strategies, an e-learning, training, and consulting service company that coaches and helps practitioners build highly profitable IRS representation practices through proven marketing, sales, practice management, and case resolution strategies. Michael helped pioneer the tax resolution industry over 18 years ago. He founded and built one of the most successful and reputable tax resolution firms in the country, going from zero to over $22 million in revenue in 12 years. Michael was a 2011 semi-finalist in Ernst & Young's Entrepreneur of the Year Award. He has made the Inc. 5000 list twice and has been featured as a guest expert on more than 200 radio and television shows, including Fox News. He's been interviewed and published in U.S. News & World Report, The Wall Street Journal, Entrepreneur Magazine, Inc. Magazine, Tax Analysis, Tax Notes Today, and others. Rather than try to be all things to all people, Michael has built a finely tuned niche practice based on the simple fact that 1 in 50 taxpayers has an IRS problem that needs to be solved. Welcome to the podcast, Michael. I'm excited that you could visit with us today.
Hey, thank you so much, Ian. I'm glad to be with you today and your listeners. And as you were reading that bio, I'm going, God, I'm grateful. Is that me? Anyway, I'm grateful to be here.
Good, thank you. Well, this is going to be fun. I'm looking forward to hearing your story because you have a very different take on running a successful CPA practice today, a very entrepreneurial approach that I think a lot of us could learn from.
Mm-hmm. Yeah. I'm a I'm a second-generation Holocaust survivor. So my father was always in the retail business, and he taught me a couple of things, but namely one phrase he always said that stood out in my mind was, and this is a little brash, but this is kind of how I think of things, that everybody's a liar and nobody walks. And he had a kosher butcher store, and his philosophy was if someone came into the store, they were not leaving unless they purchased something. And if they said something cost too much or they didn't have the money, he knew that they really did. So that's kind of the mentality that I take, because I look at the business as a retail business that you're dealing with the public, not being a CPA practice, if you will. A lot of practitioners get caught up in the professionalism or the I'm looking for a certain word to describe it, but it really is, at the end of the day, you're dealing with the public. It's a retail business.
Michael, before we jump further into your story, and I think those were some very interesting comments, I'd like to get your perspective on the entrepreneurial mindset. For the most part, CPAs, as you just kind of indicated, are generally not thought of entrepreneurial thinkers, maybe not even business-minded. Mm-hmm. Most of the time, they're jumping from deadline to deadline, and they can't get beyond today's to-do list. Mm-hmm. Why do you think that mindset exists?
Because they think that their deliverables are primary and the only thing that matters to them. Whereas if you look at the top professionals who rise to the top 1%, 5% of the profession, they realize that marketing is the overarching umbrella of everything they do and that their deliverables are secondary. And that's a very hard mindset shift to make, especially with accountants. Most accountants do not like marketing and hate selling even more. But the way I define marketing is communication, and selling is helping or educating. And once you make that mindset shift, things change. And then the other thing I always thought about my services were that I have a moral obligation to a taxpayer who is in trouble, that if I didn't offer them my services as a way up and out for them. In other words, I was doing a disservice to the prospect, to the client, if I wasn't able to help them, because their situation is only going to get worse when it comes to IRS problems. And that's how I viewed everything. It was a total mindset shift where marketing is the overarching umbrella. I mean, I think it was Ray Kroc of McDonald's who said that clean bathrooms are not maintenance. Clean bathrooms are good marketing, because it's an impression that people have when they come into your office or restroom.
Yeah. Now, do you see that mindset changing? Do you see CPAs become more entrepreneurially focused?
Yes. I mean, I see the light bulb going off in a lot more people during the last couple of years, because they realize a couple of things. Number one, the tax prep business is basically going to evaporate in the next 3 to 5 years. If you have a 1040 accounting practice, you really need to be looking at what you're going to do to replace that income, because it's going away. It's been going away, and it's going to be gone in the next 3 to 5 years to all the do-it-yourself online tax filing services, and even the accounting services, the monthly accounting through Xero. So accountants realize they need to replace those revenue streams. And here's the other thing. Most traditional or conventional CPAs really feel disrespected, unappreciated, and underpaid, because they're providing a commoditized, unprofitable service, if you will. So going to perceived value-based services like IRS representation, or maybe college planning or financial planning, it's all perceived value now. And that's where, the rubber meets the road with regard to not trading hours for dollars and doing, fixed fee menu pricing. And that's what I advocate.
Oh, I think we're singing from the same song sheet, Michael. In fact, you're echoing many of the words that we've said many times. Now, you were an early pioneer in the tax resolution industry. I guess going back almost 20 years ago now, but I know you didn't start on that path.
No.
I'd like you to maybe plot your career a little for us. Can you take us back over your days as a traditional CPA, and what was that like? And I believe you were working at a company as the CFO when life changed pretty dramatically. Could you give us a little...
So I was in the corporate world for 18 years before I started my own tax resolution practice. And the last position I had, which was CFO of a company here in Los Angeles, they brought me in to clean up a huge mess. I mean, the bank accounts weren't reconciled. The staff needed to be changed out. I mean, there were so many things that were wrong. And I was charged with the responsibility of fixing that, which I did. And it took me about 18 months or so to fix it, got it running like a Swiss clock. And I made a mistake. I went on vacation for 10 days. I hadn't been on a vacation in a long time with my wife and then young family. And nothing blew up at work. Because, I should have having hindsight, I should have booby-trapped or sabotaged something in the accounting and finance department to blow up. So when I got back, they really needed me, but so much for integrity. So my boss called me up into the office and he said, Mike, your services are no longer required. And this is the first day I returned back from that vacation. There was no advance warning, no severance, no nothing. And I was about already $100,000 in debt because I was living in Los Angeles and I did some job transitioning a few years before that, looking for that perfect job, trying to make more money, trying to better myself. And there were periods of unemployment. So anyway, I'm packing up my office. I'm putting my CPA certificate in the box and everything else. And people of a certain age will recognize this term. I also put my Rolodex in the box, proceeded to pack everything in the car, get in the car and drive, get on the freeway to drive home. And, for whatever reason, I pulled off to the side of the road, and I don't know how long I was there, but a couple things popped into my head while I was sitting there. One was, what was I going to tell my wife this time? Because this wasn't the first time. The second thing that popped into my head was, where was the money coming for the June mortgage payment? And the third thing that popped into my head was, I was unemployable. There was no way I was going to go work for anyone ever again. I just made the decision right then and there. Then another thing that popped into my mind, there were actually four things, was a few months prior to that on C-SPAN, they had the Senate televised finance hearings where the average American got up in front of the TV cameras and basically told the audience how the IRS ruined their lives, padlocked their businesses. Some of their relatives died from the stress of heart attack because the IRS was just relentless. And why? And I researched and found out all because they owed money to the IRS, not because they were bad people, not because they took their money and put it in offshore accounts in the Cayman Islands or tried to evade taxes, all because life happened. Death or serious illness of a wife, a husband, God forbid, a son or a daughter or a loved one, loss of a job or both spouses losing their job, or the husband being self-employed and his major customer going BK, divorce, nasty custody battle. So in other words, negative life-altering events that took place in these people's lives that put the filing and paying of the taxes on the back burner, not because they were bad people. And I made a decision. I was always a David versus Goliath guy. I always rooted for the underdog. And I made a decision at that point that, you know what, I'm going to help these people. And I didn't know anything about anything. And I embarked on a journey to learn everything I could. Not so much the technical. I certainly did a lot of learning on the technical, but what was more important to me, I knew I needed clients, because what's the use of having this technical skill of resolving people's tax problems if you don't have anyone to resolve them on? And at the time, this was 1998, there really wasn't a lot, at least I didn't find a lot of marketing and selling courses or seminars in the accounting industry. So I went outside the accounting industry and invested in my education, tried to learn as much as I can about marketing and selling outside of the industry. And I ran across, some of these direct response marketing gurus like Dan Kennedy, Jay Abraham, Bill Glazer, Paul Hartunian, and learned that what they were teaching and saw it actually I saw it in progress in other industries on how these successful folks were employing their methods in other industries. And I just poured it over. I'm a big swipe and deploy guy. If I see something that's working in another industry, I figure out how I can incorporate that into my world and use it. So I developed this system based on what I learned that gave me predictable profits and cash flow and leads and prospects and clients all year round. And it wasn't easy at first. It certainly wasn't easy. As a matter of fact, I told my wife just after I got let go, I said, let's take out a $50,000 home equity line while I still have current pay stubs to show the bank. Right. So that, we have some sort of cushion, because I told her I was going to do this. And by the way, that's the other thing. You really need the support of your spouse behind you when you're going into any new endeavor. It's very, very important. She was behind me. And we did that, and I used the money on starting a practice, getting an office, a website, and spending it on marketing that I saw and knew would work if I did it this way.
So where did your first client come from?
My first client came from, it's a great question. I started on my dining room table. So within about 30 to 45 days, I started to look for office space. And I was looking for like 500 square feet of office space. And the broker who was showing me space knew I told him that I solve IRS problems. And he said, you know what? I have a musician buddy of mine who's about 42 years old, hasn't filed in a few years, and owes $47,000. Can you help him? And I just immediately, the words just came out of my mouth, yes, absolutely. Not knowing anything again. And I took the case, and we settled that case for $2,500. We got him all filed up, got his levies released, and settled, did an offer and compromise for $2,500. Getting rid of, $48,000. And that was my first client and first foray into this business.
And did you know that you had a winner with the tax resolution services right from the beginning?
It took a few months. I mean, that certainly gave me a lot of confidence, getting that case through that referral, if you will. But within, I started the practice in June, and by October, November, I was bringing in 3-4 cases a month. I was getting about $16,000 a month in gross revenues at the time. And a few months after that, I was already doing about $25,000-$30,000. And at that point, I knew that not only was this a business, but this was a very lucrative business.
Yeah, well, I think it's testament to your fortitude that you actually, realized that after you were let go and you sat down there and you kind of toughed it out. But let's talk a little bit about once you'd got some momentum, how were you able to grow that success month after month? Because it's difficult to keep doing that.
Oh yeah, so. Initially I started with mostly offline marketing, direct mail campaigns, building a Maven or referral network, placing some print ads in newspapers. But what really got me on the growth plan is radio. And within short order, within a few years, I owned the Southern California Airways when it came to tax resolution. And here's how I learned that, because I didn't know anything about radio either. And radio, by the way, was a 5-to-1 return on investment, almost religiously across the board. So if I spent $1, I got $5 back in sales, and I teach my students, if you knew at Vegas there was a slot machine that if you put $1 in would pay you back $5 every single time, what kind of budget would you have? Well, the answer is I wouldn't have a budget. If that was the case, why would I have a budget if I knew I was getting 5-to-1? But anyway, I bought radio on a remnant basis. There's not a radio station in this country that doesn't have unsold inventory. And they'll never tell you that, but every station has unsold inventory. So I had a sales rep from a radio station in LA come to my office month after month after month, and I threw him out month after month after month until finally he said, Michael, I have these radio spots. They're remnant spots. They're $20 a spot. I'll sell you 25 of them for $1,000, and the spots are running over the next 14 days. So I said, fine, let me try it. And, all radio stations will also produce the commercials for you. And this radio exec happened to be a student of direct response, which is key. Anyone listening to this, tax resolution is a direct response business. People who are in discomfort and pain are looking for a solution. That's direct response in my book. But anyway, so these spots would run, 19 of them would run in the middle of the night, 3 in the morning, 4 in the morning. And by the way, that's not terrible because people with tax problems and have other credit problems, they're not sleeping too well. So it's not a terrible time to run a spot. But one of those spots played on the Howard Stern show when he was on terrestrial TV here in the LA market during rush hour, and my one phone didn't stop ringing. And that taught me something. What it taught me was that when you have a controversial radio personality doing your spot or voicing your spot or giving you a testimonial, it's 40%. You will receive 40% more phone calls, which will relate into 40% more business than if a non-entity is doing your radio spot. So I parlayed the profits. And by the way, after that happened, I started buying spots on the Howard Stern show, and they weren't $20 a spot. But I started to invest the profits into other radio personalities and other stations in Southern California until I had enough to graduate to the Howard Levins, the Glenn Becks, the Sean Hannity, the Rush Limbaughs of the world, and that really took us to a whole new level.
Wow, that's an amazing journey, very impressive. I mean, I can see there are three important takeaways I'd like to explore a little bit later in more detail. But I've got to ask you, do you ever have any doubts when you first decided to do tax resolution? For example, about getting paid. You know, people owe money on their taxes. One might imagine that these people are, deadbeats, and they're never going to pay you. So how did you get around that challenge?
Right. That's why most CPAs don't want this business. They view it as a disruption to their firm because they don't know how to manage this type of client or business. It's a different animal. So it's a very good question, Ian, that you asked, because all my CPA and lawyer buddies at the time asked me the same thing. They thought I was crazy. They said, how are you ever going to get paid with people who owe thousands, tens of thousands, hundreds of thousands of dollars to the IRS? You know, do you think you're going to be able to collect if the IRS can't collect? And my first words out of my mouth were, well, in advance, of course. So I devised this system where I was paid in full prior to the client's case settling. In 16 years, I never sent out a monthly invoice. Never. I never made month-end collection calls. The way I devised the system is, let's say somebody's case was $5,000. I would collect a 30% deposit, if you will, or about $1,500, and then I would carry the client over the next 6 to 8 months on monthly recurring payments where I got a authorized credit card authorization form signed or an ACH, electronic automatic debit form signed, and that's how I got paid. So I was also, not only did I get paid in advance, but I was also now able to predict my cash flow and profits based on that payment schedule going out 6 to 8 months, and working backward. How many leads do I need to generate to get qualified prospects? How many qualified prospects do I need to speak to get retained by a certain number of clients? If I got retained by a certain number of clients at $5,000 each, now I knew how much money was going to be coming in 6 months from now, 8 months from now, in the off season, if you will.
Oh, that's great. That's really great. Now, I have to ask you something else. What about that? You know that little nagging little voice in our heads that says, you can't do this. You don't have the training. You don't have the intellect. You don't have the experience. You don't have whatever. So you don't even bother to try. It's quite impressive. It impresses the life out of me that when you first started, you didn't sit around waiting for somebody to anoint you as an expert or anything like that. You didn't let the fact that you had some zero clients stop you from trying. I'm sure you must have had some doubts at some point. How did you kind of tame those doubts and just, basically push forward?
Well, I have an average IQ. There's a lot smarter people out there than me. I'm a street kid from Brooklyn. I mean, I grew up with not a lot. I mean, I grew up not only in Brooklyn, but in upstate New York, in the Catskills, in Monticello. And, when it came time for ski season, all my buddies had new skis. I went to the thrift shop with my dad and bought, used boots and used skis. So, I didn't have a lot to start. But what I did have was a burning desire to succeed. And I was always good with people. I connected with people right away, and I think that's important. You need to build, trust and rapport with folks right away. And I was honest with my client. I told them, even at the beginning, look, I don't have a lot of experience in this. I haven't been doing this this long, but I guarantee you, I will research as much as I need to see what's the best possible way to resolve your problem. That I can guarantee you. And, most people agreed with that. Most people said, okay, here you go. Instead of hearing from professionals, I'm the best, I'm this, I'm that, I have all these credentials, I did this and I did that. I let my results speak for me. And you know what? It wasn't easy for me either. I mean, there was a time, and a lot of your listeners would probably appreciate this. I was a few months in practice, and being a righteous advocate and a vigorous advocate of my client, I cursed out a revenue officer, which is not a good thing to do. You don't want to curse out a federal officer of the United States, because what happened to me, Ian, I was suspended from practice for 1 full year. This was in end of 99, 2000. I couldn't pick up the phone and speak to the IRS. I couldn't put my name on a power of attorney. I was basically handcuffed. However, I grew my practice by 60% that period. I went from a run rate of about $340,000 a year to over $650,000 a year during the 12 months that I was suspended, because I also learned that you don't take your foot off the marketing gas pedal if you want to grow and be successful. So all these marketing strategies I teach, I had firing on all 8 cylinders. And what I simply did was I found an attorney friend of mine who was able to put his name on the power of attorney and loaded his lips. I told him what to say and when to say it. I did all the work. I did all the 433A financial grunt work. I did the offers and compromise. I did the penalty abatements. He just put his name to it and sent it in on behalf of my clients. But that was a blessing in disguise, because what it told me was, even though you didn't need to perform the actual negotiation with the IRS if you knew how to market and sell. And that was very eye-opening for me. Now, even though I've represented probably close to 2,000 individuals and small businesses during a 16-year career doing IRS representation, the most important part is the marketing and sales. When people ask me what I did for a living, I told them that I was an emergency room for people that were in IRS crisis.
Right.
And that I always viewed my company as a marketing and sales organization that provided exceptional professional services.
Yeah, excellent.
Not the other way around. I didn't say I'm a professional services corp CPA that does some marketing and selling. It was the other way around. And that's that mindset shift that I was talking about earlier.
No, that's so important. And in fact, that leads me back to those 3 takeaways that I want to make sure the listeners hear. Number 1 was, it's creating a business that fits you rather than what most people do, which is choosing a profession and letting it run your life.
Right.
And when you came to that crossroads, you realized that traditional CPA or CFO wasn't for you.
Correct.
And you very deliberately built a practice that fits your goals and let you have a life.
Mm-hmm. Yes, very astute. Yes, that's correct. That's absolutely correct.
My second takeaway is the importance of riches in niches, as an American would say. We've heard this from other CPAs on the podcast as well. Just like a doctor, when you're specialized, you get paid more. Whether you do tax resolution or specialize in a certain industry or whatever, there are plenty of underserved markets out there, and it instantly separates you from those thousands of other Me Too accountants out there.
Yeah, and I was having a coaching call this morning with a member, and he wanted to expand his reach outside his state, and I said, look, people who want bookkeeping or a tax return done, they're not going to drive more than 15 or 20 minutes to your office. But someone with an IRS problem, a serious IRS problem, will drive 3 to 4 hours to see you because you are the doctor. You are the specialist. You are the guru. You are the go-to person. And that can all be accomplished through positioning in your marketing and your messaging and just what you said, Ian. There's riches and niches. When you niche down and specialize in something and become the go-to person in that niche, the money will follow. The income will follow.
Right. Well, and the third takeaway for me, and it may be the most important one, is the value of a system. By the way, we're tremendous believers in having processes in place and a roadmap to follow. Our entire program is based on predictable, repeatable systems for doing advisory services in a profitable and scalable way. And I see you've done the same. How important is it to having a system that works on autopilot month after month?
Oh, it's mission critical. I don't know how you do. I don't know how you get anywhere without a system. I mean, that's what I did. I took my 16 years in the trenches and developed like a bolt-on system that any CPA or tax or even law practice can bolt on and have a tax resolution practice area in their firm. The marketing, the sales, the client control, the case resolution. We had a system for everything. I had a system for when the front office person got in the morning, what was the procedure, how did she open the mail, and how did the mail get distributed? I mean, we had a system for everything. Every single function in the company had a procedural manual that if somebody was out sick, this is how it gets done. You pick up the binder, go to that tab, and this is what you do. So we deduced everything to a system in the practice.
Yeah, I even love the fact that you got your payments down to a system, so you were never really chasing receivables.
Correct.
This whole conversation to me, Michael, was really fascinating, and I could really talk about this all day. But as time kind of ebbs away, there are a couple of questions I'd like to get to that I ask all my guests. The first is, if you could go back 20 years and give yourself one piece of advice, what might that be?
That's a good one. One piece of advice, what would that be? That would be, I've learned it later on in life, but if I went back 20 years, what I would say is, and it may not be business as much as it is personal development, and that is not to hold any resentments or anger against anything, person, or place. I think that would probably be one of my best pieces of advice, and also fear, working through your fear, because here's my definition of fear. It's a mile high, a mile long, but paper thin. All you have to do is poke your finger through, and you're on the other side. So that would be two things that I would say.
Yeah, that's excellent. And the second question is, as we're wrapping up 2016 and wondering what lies in store for 2017, where do you see the opportunity? What's the one thing you're most intensely focused on for 2017?
Well, in 2017, I think we're going to see the pendulum swing, the IRS enforcement pendulum swing back to aggressive enforced collection. I mean, for the last 5 or 6 years, because of the administration and budget cuts, our direct marketing partner, who I call the IRS, has issued 50% less levies, 50% less liens as compared to 2011, 2012. I think Congress is going to appropriate the necessary funds to fund the IRS, which includes the enforcement arm. And I think you're going to see, even though there's more people now than ever that have tax problems, a lot of them have their head in the sand because the IRS hasn't been bothering them because they haven't had the budget to do that. I think you're going to see that swing back to aggressive enforced collection, which means I think this niche is even going to get more popular because the IRS is going to step up their enforcement and drive people to our doors and phones.
Excellent. And any final words of wisdom, perhaps, for any would-be CPA or existing CPA listener?
You know, I would say that, look, if I asked you, how's business this year, what would be your response? And then I would say, well, if you keep doing the same things you're doing now and expecting different results, that's not going to happen. And, one of the things, one of my mantras is nothing changes if nothing changes. So, now's the time to look at adding something or doing something new so that you have a valuable asset to exit upon or to sell. And by the way, I can get into a whole nother conversation why a tax resolution practice set up as a separate entity, separate LLC or an 1120S, is worth so much more than a traditional accounting or tax practice. So that's just another thing that I'd like to convey.
Well, I'd like to thank Michael Rozbruch, founder of the Tax and Business Solutions Academy, for being so generous with his time today. Thank you, Michael.
Yes, Ian, if I can, I do have for listeners, I am putting on a live event in Orlando, strictly for tax resolution. It's called the Marketing and Technology Extravaganza in Orlando, January 18th through 20th. And if people want more information on that, all they need to do is go to my website, which is rozstrategies.com. There's a ton of information on the event. That's rozstrategies.com. So if anyone's interested, they can go there and learn more.
Okay, that's great. So that would be the best way to contact you, correct?
Yes, rozstrategies.com or info@rozstrategies.com would be the best way. And again, Ian, thank you so much for having me. I really enjoyed this, and hopefully your listeners can get some valuable information.
I enjoyed it as well. So, okay, there you have it. This is Ian Wellham saying goodbye for now. Thanks for listening. We'll see you next time on the Accounting Success Podcast.